US oil spot, and what a wonderful week we had here on the US oil spot. Remember that we have been buying this asset since the beginning of the week after we identified a range. Remember, we saw how price action was initially confined within the $75.75 level, and our key level area around the $75 area and the $74.80 level. Now, with this flat channel here, it gave us an insight into the indecision that was going on in the market at that point in time. And usually, whenever we identify this kind of structure on the chart, we exercise patience and wait for either the breakdown of the range to give us an opportunity to sell, or the breakout of the range to give us an opportunity to buy. Well, at the beginning of the week, I did mention that I had a sell position triggered, which moved about 80 pips before the bullish momentum came in. Now, we had two buy positions triggered at the beginning of the week, which actually and unfortunately went into a loss. Remember, during our live session on Monday, we decided that we will be buying at the breakout of that resistance line at the $75.75 area. Now, with a buy stop order around that area, we saw the first buy position triggered, which of course went into a loss. Then on Tuesday's trading session, we saw another buy position trigger, and that one also went into a loss. So it wasn't a very good start for us this week, but thank goodness we were able to recoup the loss we incurred at the beginning of the week, as price action did break out again for the third time, and this time around price action continued to climb and find new highs. Then remember that we also had multiple entries like the $76.25 level where we added positions. We also added one more at the breakout of the $77.10 area, and during Wednesday's early hours of Thursday's trading session, we also added another one at the breakout of the $78 area. And during our live session yesterday, we talked about adding one more position if price action ever breaks out of the $79.65 level, which unfortunately did not even move close to that area. And at that point, we begin to notice selling pressure resume in this particular market. And I can remember yesterday I did mention that due to the nature of the $79.65 area, after seeing how this level had been a strong selling niche at some point on our higher time frame, we decided to move all our stop losses on the buy positions to secure them, and let's see how the market will react to that range. So on the US oil buy position, we were able to scoop in a significant amount of profit. Now, for the sake of clarity, let us run through how many pips in total we were able to scoop between Tuesday and yesterday's trading session. So on the first buy position, we had about 350 pips move before the bearish momentum came in. We had about 300, and then this one too came in about 200 plus, and then we also had about 120. So we had about 900 total, but when price action took us out of that position, it will have dropped to maybe around 600 to 700 pips, which is not bad at all for the US oil assets. Now, if you remember vividly during our live session yesterday, I did mention that if selling pressure persists around the $79.65 area, that is, buyers find it difficult to break through that area, then we might likely be seeing a sell-off, and that we should be positioning ourselves below the $78 area to capitalize on that bearish momentum. And in fact, if you had done that, you will see that price action moved over 280 pips with a double bearish engulfing candle, as you will see here. And for those of you who capitalize on that opportunity as well, well done to you, as this will make you tremendously profitable so far on the US oil for this week. Now, for those of you personally, I'm already out of my sell positions, and in fact, I already have a buy position triggered at this juncture. But for those of you who still have a sell position running, I will encourage us all to either close in on that position or move your stop losses to that area around the $76.50 level. Let's secure this position as we begin to notice the resumption of buy pressure in this particular market. Now, as we prepare for the New York session today, what is going to be our plans for today? How do we intend to capitalize on the next move? Are we going to continue buying, or are we going to get ready to add more sell positions to our existing trade, especially for those of us who still have a sell position running? Well, before we go into the details on the higher time frame so that we can have an holistic perspective into what is going on in the market, I would like to say here that price action has returned into the resistant line of the range we identified at the beginning of the week. Remember, we had the range, I did mention this earlier, as we saw price action confined within the $75.75 level and that key level at the 75 area at the beginning of the week. Now you will see what has happened here. Price action, despite the strong bearish momentum from yesterday's trading session, price action is right back into that range. And one interesting thing about it is that as soon as it got into that range, we begin to notice some buy pressure resume around that area, giving me signs that we might likely be seeing another buying opportunity from that area, especially after considering that area to have a memory for buying power. And look at that, is exactly the same area where we bought at the beginning of the week. Now, during yesterday's trading session, we all knew that the oil prices plummeted more than 2% after the OPEC Plus producers agreed to cut production for the first quarter of 2024. Now, this unexpected drop in oil prices suggests that investors were disappointed at that decision by the agreement by the OPEC Plus to cut almost 2 million barrels per day for the first quarter of 2024. However, signs of recovery emerged during the Asian session as we saw just exactly around that range we identified at the beginning of the week, and with oil prices trading around the $75 area and the $78.30 level. Now, with the situation we have here, I'm beginning to suspect that we might be seeing the resumption of buying pressure, maybe in anticipation of the second wave of the bullish momentum that started this week. But before we go into the details here, let's run through our 4 hours time frame where we started our analysis for the week. Now remember that on the 4 hours time frame, after we took into consideration the nature of price action for the last 6 to 7 weeks, it was a clear observation that price action has been on a bearish momentum, and interestingly, price action transitioned into a descending channel. So when we connected the series of lower highs, we had the resistant line of that descending channel, and then after connecting the series of lower low, we had the support line of that descending channel. Now at the beginning of the week, something interesting happened here. We saw buy pressure resume around our key level situated at the $75 area, giving us signs that sellers are finding it difficult to break through that area. So it was just more of buying pressure around this area at the beginning of the week, further emphasizing the strength of the buyers around this area. Now, in addition to this observation was this engulfing bullish candle that broke out of the resistant line of that descending channel, which was a beautiful signal that the resistant line may no longer have the capacity to continue to negate the bullish attempt. And from a technical standpoint, whenever price action breaks out of a structure like this, we do expect that some point in time price may likely come back to retest the structure that was broken, where the appearance of buy pressure will incite the next wave of bullish momentum. Now, look at what has happened here in the last 24 hours after the breakout of the resistance line of that descending channel. You will see here that as soon as price got back into the resistance line, which interestingly shares a confluence with the $75 level, which happens to be our key level for the week, we begin to notice buy pressure resume around that area. And in fact, in the last 20 hours, we have noticed buy pressure, which further emphasized that we might likely be seeing the beginning of another wave of bullish momentum. Now, with the information we have here, it makes quite a lot of sense for us to consider buying as long as price action remains above both the resistance line of the descending channel and that key level has a $75 area. Now, if I do want to consider selling the US oil spot, I would rather want to see price action take out all the buy positions along the $75 area. As you will see, this level has a strong memory for buying power. So the only condition that will make me want to be selling the US oil spot today is for price to drop down the $75 area. And since price is still floating above the 75 area, we will be negating the idea of selling and start considering how we want to be jumping into this buy position. Now, with the information we have gathered on the 4 hours time frame, let's scale down into the 1 hour time frame to understand the nature of price action around that area. So I will zoom right into where our center of focus is going to be for today, which is just exactly above our key level. Now, like I said earlier, you will see that since the impulsive move dropped into this area, we have seen our sellers have struggled to break through the $75 area, and in fact we begin to notice some higher lows evolve here. Now, as a result of this observation, I did have a buy position triggered around the $75.75 level, and for those of you who capitalize on that one, well done to you. We want to ensure that our stop losses are way close to the $75 area, which will be dovetailing to between 60 to 70 pips depending on where your entry point is. Now, for those of us who had missed out on this opportunity, well, let's see how far this momentum is going to go. So we also have another level around the $76.50 area, a level which has been a selling niche during the later part of the New York session yesterday. Now, if price action does break out, retest the structure, I will be looking out for more opportunities to buy. So we have another buy stop order around that area, and let's see how price action will play out here. But one important thing I would like to state here is that as long as price still remains above that $75 area, we shall continue to look out for buying opportunities. Now, if price action continues to climb, we have multiple levels that we will be using to maximize the next move. Personally, I have a buy stop order above the $78 area, and if price action continues to climb, then a breakout of the $79.65 level, that's the highest point price action has been for this week, will be welcoming more buy positions in that regard. Now, there is a caveat to this current structure as we will be monitoring price action here. Now, if price action goes on to break out of the $76.50 level, triggers a buy position, and price continues to climb up, remember that we have the ascending trend line, which was supporting this bullish idea since the beginning of the week. And you saw what happened here yesterday, that price action did break down the ascending trend line at this point. And from a technical standpoint, we may likely be seeing a situation where price may come back to retest the trend line that was broken to incite a downtrend scenario. So what this simply will tell us is that as soon as price action gets close or around that ascending trend line, we do want to be moving all our stop losses, secure the current buy position, and let's be patient enough to wait to see how the market will react to this ascending trend line. Now, if price action gets into the ascending trend line and we begin to see that buyers are finding it difficult to break above the structure, which of course will reflect on the chart as continued selling pressure below that structure, we will be looking out for selling opportunities to the downside in attempt of a downtrend continuation. However, If price action goes on to break out of that trend line and climbs above the $78 level as well, this will further emphasize that buyers are right back on track and price is now back on that same ascending trend line that has been guiding our bullish momentum since the beginning of the week. Then we can feel comfortable having more buy positions running at this particular juncture in the market. So this is how we are going to be managing our positions on the US oil spot for today. As you will see right here, that our center of focus for today is basically between the $76.50 level and the $75 area, where depending on how price action reacts to the structure will determine where price is likely going to be closing for this week. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. This is my view right here. And if you feel that there is an area you need me to clarify for you, feel free to drop your questions in the comment section below. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions whatsoever, after which we will be moving on to the next asset on our watch list for today.